Question 5 focused a lot on stock cards, but what was different about it was they actually gave you the stock card instead of getting you to fill it in. So it covered 5A, it just looked at the perpetual inventory system, and you were given the following stock card and asked to do something that seemed kind of simple, which was identify the transactions that occurred on the 4th of July, the 14th of July, and the 22nd of July. So the best way to answer this question, it's more difficult than it seems. You really need to remember what makes stock go up and what makes stock go down. So the things that will make stock go up will be buying stock from suppliers, stock gain, the owner contributing stock, and sales returns. The things that will make stock go down will be selling it, stock losses, drawings, donating stock for advertising purposes, purchase returns, and stock write-downs to the net realizable value. The other thing you needed to remember was how do we value each type of transaction. So if it's a sale, stock's valued at, the cost price is valued at FIFO, and stock losses valued at FIFO. A stock gain, however, is valued at the lowest of cost on hand under the conservatism principle. Donations are done with FIFO, drawings are FIFO, purchase return is the amount shown on the supplier's credit note, and a sales return is last in, first out in reverse order, and a stock write-down will just be the lower of the cost and the net realizable value. So now that we've got these, or you've remembered these two things, you can start to narrow it down. So looking at the one on the 4th of July, we know it's in the in column, so that must mean stock went up. So that limits it to any of the following four. So we want to try and rule out any of them that it can't possibly be. So for example, this is a memo, it says memo 87. So that must mean this can't be a cash purchase or credit purchase of stock, because otherwise the document would be a check or an invoice, so we can get rid of that. It also can't be a sales return, because a sales return would have a credit note number, so that gets rid of that. So now we're down to, it's either a stock gain or the owner contributing stock personally. And both of these would have memos, so how do we know which one's which? Well, stock gains and stock losses are only recorded on the last day of the period or the month. So in this case, this transaction's on the 4th of July. Businesses don't shut their shop down and do their stock takes in the middle of the month. They will do it on the last day of the period. So that means if this is on the 4th, then it can't be a stock gain, and it must be the owner contributing stock personally. On the 14th, it is an out column entry, so that must mean stock's gone down, and that's quite complicated because that could be any of 6 things. So seemingly we need to go through one by one, but there is a bit of a shortcut. What we can see is that under the details column there is a credit note number. It says credit 425. Now the only transaction that can have a credit note must be a purchase return. So we can get rid of all the others and just surmise that that is actually a purchase return. On the 22nd, we've got an out column, so we have our 6 possibles. We have a memo number, so that gets rid of a sale, because otherwise it would be a receipt or an invoice, or sorry, actually a receipt or an invoice. It's not a credit note number, so it can't be a purchase return, so we'll get rid of those 2. Now we're down to stock loss, the owner taking out stock for personal use, donating, or stock write-downs. They will all have memo numbers, so we can't differentiate based on the document number there, memo 88. However, what we can see is that this has been valued at FIFO. So if we just look at the previous transaction, we had 5 at 90, then 5 at 85, then 25 at 92, and then something happened and the stock left the business and it was valued at $90. So we can see here 3 at 90. So that's come from the first pile. So these have been valued at FIFO. Now if that's FIFO, that must mean we get rid of stock write-down, because a stock write-down is valued at the net realizable value. So that gets rid of that. Now we're down to stock loss, the drawings or donations. Now we know it didn't occur on the last day of the period, so therefore it won't be a stock loss. So for the same reason as the first transaction wasn't a stock gain. So now we're down to either drawings or donations, and there's really no way to tell because they're both valued at FIFO, they both have a memo, they're both in the out column. So what we're going to need to do is go to the question and read it, and it says no stock was withdrawn for personal use during the month. So based on that, that gets rid of drawings. So this transaction has to be a donation of stock for advertising purposes. So the marks were obviously, it just said identify, so we can just clearly state in a couple of words what the transaction was. There was a capital contribution, a purchase return, and a donation of stock for advertising. How did the state do? They did quite well, 1.8 out of 3. 17% of the state couldn't get 1 mark, and 3 in 10 students were able to get all 3. So looking at the examiner's comments, the main thing was the constraint. It said that there was no stock withdrawn for personal use, and you really needed that to be able to figure out what these transactions were.